After its operational launch in 2023, Nectaro is yet another peer-to-peer platform that is supervised by the Latvian Financial Authority and regulated according to MiFID II. Apart from its regulation, Nectaro offers many other advantages for investors as well, including competitive interest rates of up to 15%, profitable lenders, and a well-established parent company in the background. Whether these advantages are sufficient to trust the Latvian peer-to-peer platform with your money, how I assess the platform's risk profile, and whether I personally invest in Nectaro assets are all topics going to be covered in today's platform review. If you remember my trip to the Baltics last year, you will know that I visited Nectaro on site in Riga. Something that immediately stood out has been the sheer size of their office facility, with up to 500 people working across 9 different floors. This is mainly due to their parent company called DYNINNO Group, which was founded 2004 in San Francisco. The group offers products and services in more than 50 countries across different industries such as travel, finance, entertainment, and technology, employing more than 5,000 people worldwide. For its financial division, the DYNINNO Fintech Holding Limited was established in 2015, which includes lenders from Romania and Moldova, as well as the peer-to-peer platform Nectaro, which was set up to expand the presence in the financial sector while also reducing financing costs and diversifying funding sources. Next up, let's take a look at the ownership structure and the key people behind the platform. The peer-to-peer platform is operated by the Latvian company Zia Nectaro. A look at the Latvian business register reveals that the platform is 100% owned by the Cypriot company DYNINNO Fintech Holding Limited. This Cypriot entity is in turn owned by 2 different shareholders. Around 22% of the shares belong to Dimitri Zimba, who is a co-founder of the DYNINNO Group. The remaining 78% are held by Dynamic Innovations Limited, whose beneficial owner is Alex Weinstein, also known as the US-American founder of DYNINNO Group. The operational management is led by Latvian Sigita Kotlere, whom I met personally during my trip to the Baltics last year. Prior becoming CEO of Nectaro, Sigita has worked for 3 years as partnership executive at Mintos, where she was primarily responsible for onboarding, due diligence, and managing new lenders. Currently, Nectaro operates with a core team of around 15 people, including some familiar faces from other peer-to-peer platforms such as Twino, Debitum, and even Groupier. Nectaro was primarily established as a financing tool for DYNINNO's lending operations, meaning that the profitability of the marketplace itself, similar to Via Invest or Robocash, is only of secondary importance. For DYNINNO Fintech Holding, however, we can find an audited financial report for 2023, which was prepared by PwC and reviewed in accordance to IFRS. The report showcases a profit of $3.2 million, while also the balance sheet KPIs look pretty stable and solid. The equity ratio stands at a strong 38.8%, while the liquidity ratio is at 2.24 and the debt to equity ratio is at 1.57. Next up, let's review the loan offerings and the investment characteristics. On Nectaro, investors can invest in debt securities composed of small fractions of multiple loans with similar characteristics. These can either be unsecured consumer loans or business loans. Currently, there are 3 different lenders on the marketplace. The Romanian lender Credit Prime offers credit lines with terms of up to 2 years and interest rates between 12 and 13.5%. This lender has been a part of the fintech company EcoFinance since 2015. The Moldovan lender operates with a similar structure, although the maturities of the credit line product can reach up to 5 years. The third lender is Abile Finance, founded in 2024 in Latvia, which provides business loans to companies within the DYNINNO Group. These funds are meant to support the lending operations in Cyprus and the Philippines, offering investors a potential return of up to 11%. The loans on Nectaro can either be selected manually or via the Auto Invest functionality. The The passive option allows adjustments regarding borrower country, loan term, interest rates, and investment amount. The minimum investment amount for both options is €50. As with other platforms that are regulated in Latvia, also Nectaro is legally required to withhold the tax on earned interest payments. The applicable tax rate depends on the investor's country of tax residence and submitted tax documents. Withheld taxes can typically be credited against tax liabilities in the investor's home country, depending on the applicable double taxation agreement. Automated tax reports are not available yet. However, investors can request a tax report via email. Next up, let's take a look at the platform's risk profile and what investors need to be aware of before making an investment. In terms of platform risk, investors should know that Nectaro has held an investment brokerage license from the Latvian Financial Authority since March 2023, making it subject to MiFID II regulations. This means that investor accounts are protected by Latvia's investor compensation system with up to €20,000 in case of platform insolvency or fund misappropriation. However, lender defaults are not covered in this case. Interestingly, Nectaro pursued licensing 6 months before its operational launch, showcasing its strong commitment to regulatory compliance rather than choosing a more convenient jurisdiction. Regarding the potential lender risk, investors should be aware that Nectaro is currently exclusively working with internal lending companies. The credit prime lenders in Romania and Moldova have been active since 2015 and have therefore reached a certain level of market maturity. Given a potential conflict of interest, investors should carefully assess the financial health and portfolio quality themselves, which is supported by the financial statements that can be downloaded on Nectaro. Based on my own analysis, both the Romanian and the Moldovan lender are somewhat small in size, but financially pretty stable. In terms of borrower risk, the lender default rates are strongly depending on the different loan market and product type, ranging from 7 to 20%. To mitigate borrower risk, Nectaro lenders are providing a buyback guarantee, which kicks in when the loans are 60 days overdue, covering also accrued interest. And finally, let's wrap up this Nectaro review and see if the platform is worth a try. From my perspective, Nectaro appears to be a promising addition to the peer-to-peer industry, meeting all the criteria for long-term success. The platform is a regulated entity, offering competitive interest rates of up to 15% by profitable lenders, and enjoys the support of global cooperation with plenty of resources in the background. Areas for improvement include the diversification level on the lender side, transparency standards, and potentially the launch of a secondary market considering the longer maturities. In the current market environment, which is faced with shrinking loan supply and decreasing interest rates on top-rated peer-to-peer platforms, Nectaro is offering a great risk and return profile for investors to expand their portfolio selection. As a result, Nectaro is becoming the first new peer-to-peer platform that I have added to my personal peer-to-peer portfolio in the past 12 months, starting off with a €3,000 investment in assets by the Romanian lender. If you would like to start investing with Nectaro as well, please use my partner link in the video description below or visit my blog review for additional insights. And finally, please let me know what you think about Nectaro in the comment section below. Thanks so much for watching this week, and I hope to see you guys in the next video as well. So long. Bye bye.